Thank you, Shobji. Hello, everyone. Good morning. I'm
Good morning,
just
sir.
seeing if all the people have joined in. I'm only able to see you. Maybe we can wait for a minute, right? And then we'll start. Okay. I think we should start now. I hope whoever is joining has joined in. Again, a very good morning to all of you. The topic for today is, again, a disclosure standard that is operating segment, India's 108. So, whenever we talk about, the segment disclosures, we, are able to recall whatever we have studied under IGAP, right? What was the standard number under IGAP?
18,
Sorry,
18, 1 8.
18 or 17?
Sorry, I think 1 7.
Right. So under that standard, what we had studied until now, let me do a quick recap, right? So that we will come to know what are the new things which we are going to talk about under the India's regime as compared to what we have been doing under the IGAP, right? So under the IGAP, we had two types of segments. One is the primary segment and second is the secondary segment, right? Are you able to recall this thing?
Yes, sir.
Primary and secondary, right? Now, under India's, there is no such classification. There is no segment is the primary segment. There is no segment as the secondary segment. Rather, there are no such terms as well within this India's standard, right? So, whatever the segment is, it has to be a operating segment. And what operating segment means, that we will discuss first. Once we have, came up with the number of operating segments the company is operating in, then among those operating segments, what are the reportable operating segments that we will identify basis on some criteria which the standard has prescribed, right? Once we are done with the identification of the reportable operating segments, then we will start doing the reporting of those operating segments in our financial statements under the segment disclosure notes to accounts. Is that correct?
Yes, sir.
Right. Now, first of all, we will understand what operating segment means and how operating segments are identified under the Indias, because it is altogether different how we have been identifying the segments under the IGAP, right? Altogether new approach, nothing in common, right? Under the Indias and the IGAP, right? Then we will discuss how from the list of operating segments, reportable operating segments will be identified, because all the operating segments are not going to be reported in the form of disclosures, right? We only need to report certain reportable operating segments, right? Then what are the conditions? For example, the revenue is greater than 10%, PNL is greater than 10%, asset size is greater than 10%, right? So these are the three conditions, and there is one more additional conditions. So once these conditions are satisfied, then reportable operating segments are identified. Then there is another step, aggregation, right? So if we are still left with, more than 10 operating segments after, applying all these threshold criterias, then we need to see whether out of the say 15 reportable operating segments, are there any operating segments which are common to each other and we can club rather than reporting them separately? So that is called aggregation. So there are certain rules. If those rules and conditions are satisfied, then the aggregation is allowed. Otherwise, the aggregation is not possible, right? So that we will also study, right? So basically, this is the flow of discussion which is going to be happen for today, right? Now, the key question before we kick off, why operating segment reporting is required, or why segment reporting is required? What do you think? What is the purpose of this standard? Why we are doing this segment reporting?
So to know the each segment is operating effectively or not,
Okay.
and its status.
Okay. Any other? So, standard says the core principle, an entity shall disclose, that is, it is mandatory or optional, right? It is mandatory, correct? To disclose the segment disclosures in the financial statements, it is not optional. To disclose the information to enable the users of the financial statements to evaluate the nature and the financial effect, right? So, how many items? Number one, the nature, and number two, the financial impact of these segment on the overall performance of the company, right? So, who are the users of my financial statements? Lenders, bankers, regulators, general, investors, angel investors, right? Whoever is, by any chance, is interested in the company's prospects, knowing the company's prospects, right? Debtors, bankers, lenders, investors, regulators, right? All these people, right? So what it is going to enable them? Number one, if we are disclosing the segment information, that is, we will break the overall performance of the company into certain segments, right? For example, Reliance Industries. So Reliance Industries, is operating in multiple segments, right? They are into the oil business, they are into the retail business, right? They are into the telecom business, and many more other businesses, right? So if they do not report the segment reporting, right, and they only tell you that overall revenue of the Reliance for the quarter or half year or year, as the case may be, is say x rupees, right? Then by just looking at the gross revenue number of the company and the gross expenses and the gross profit, right, for all the different business domains, right, together, you will not be able to understand how company is operating its business, right? Which businesses are generating more revenue, which businesses are not, which businesses are profitable, which businesses are loss making, right? So that analysis or deeper analysis into the various businesses of a company will not be possible unless and until these segments are reported in the disclosures. Yes or no?
Yes, sir.
Right? So this is the very purpose of this standard, so that users will be able to understand in which all segments or which all businesses, right, the company is operating, or which all geographies the company is operating, right? So that information is very crucial, right? So nature and the financial impact. So these are the two items which standard is expecting that will be understood by the users of the financial statements of the business activities in which it engages. For example, a company is doing the engineering business as well. It is doing IT business and the financial service business as well. For example, which company is this? L&T, right? Larsen and Toubro. So Larsen and Toubro does the engineering as well. Larsen and Toubro does the IT business as well, and Larsen and Toubro has the L&T finance company as well within as a subsidiary, right? So they are operating multiple different, altogether different lines of business, right? So if they do not, disclose this information, users will not be able to understand how the company is navigating different businesses, right? So that's the crucial information. And the economic environments in which it operates. For example, if the company is doing exports business, then exports to Africa, exports to Middle East, exports to US, right? So in the recent past, you must be, following the news that, US is imposing certain higher tariffs, right, on other countries, including India, right? So if a company is doing, say, 95% of the exports to the US, then it is severely impacted because of these tariffs, right? So economic environment, is also crucial for a company to, understand in which economic environment it is operating, right? So if a company who is not having any business with the US companies, or no exports to the US, are not impacted, right, by these US tariffs at all. But if a company is doing, say, 50, 60, 80%, 90% of its business, right, with the US only, right, they do not operate in other markets, and then because of these tariffs, 100% and 150% tariffs, they are now out of the business, right? So it is impacting the overall business of the company, right? So how do we come to know about this, that to what extent, or what is the significance of the economic environment, by having these geographical segment disclosed, right? So if a company discloses in the financial statements that overall revenue 100 rupees, 90 rupees from the US markets, 10 rupees from the domestic market, then if this geographical segment, US and the domestic, are disclosed in the financial statements, then only you will be able to understand that this company is highly dependent for its revenue generation from the US, right? And if these negative news are outplaying in the market, then probably the investors can decide either to exit if they are already invested in the company, or not to invest in these companies unless and until these uncertainties are resolved, right? So this is the very purpose of this standard, to equip the investors, equip the other users of the financial statements of the company with this detailed level of information, right, by way of these disclosures. So if this standard is not there, so company will not be bound to disclose all these deeper insights, right, about their businesses into the financial statement. So this is the standard, casting this responsibility on the management. Is that clear?
Yes, sir. Clear, sir.
Clear, sir.
Perfect. Now, objective is to provide financial information on different business activities that an entity engages in, right? So, whatever the crucial or important business activities the company is doing, all those business activities could be identified as a operating segment. If they are identified as a operating segment and met the certain thresholds, and become eligible for reportable operating segment, then they will be reported, right? Otherwise those will be clubbed in other segments, right? Because at the end of the day, whatever the segments we are reporting, those reportable operating segments plus the others should tally with the overall P&L, right? So that reconciliation has to be there, right? Then different economic environments under which it operates, to better understand entities' performance. Like I took the example of two companies who are heavily dependent for their exports to the US markets, and the other company who is not at all dependent, right? To better assess its prospects for the future net cash flows, and to take more informed decisions or judgments about the entity as a whole, right? So this is the purpose of this standard. So it is empowering the users of the financial statements to understand the company with deeper insights, right? Rather than simply having a look at the overall revenue and overall profitability, they also will be able to understand how and which all businesses companies operating in, right? And which all businesses are profitable, which are not, right? So that's the very purpose. Now, what's the scope? Are there any companies which are not supposed to give these disclosures? No. These disclosures are mandatory for all the companies who are preparing the India's financials. So any company, either by you know uh, voluntarily choosing to prepare the India's financials, or it is mandated to prepare the India's financials. If a company is preparing the India's financial, this standard is mandatory and disclosures are required, right? Applies to which financials? Standalone financial, consolidated financials. What do you think?
For both.
Both. So standard applies to consolidated financial statements if the consolidated financial statements are being prepared. If the CFS is not prepared, then they are to be included in the SFS as well. So SFS, I mean separate financial statements where CFS are not prepared. So if CFS is not prepared, then SFS is mandatory. If CFS is prepared, then in CFS it is mandatory. Is that clear? If both the sets of the financial statements are prepared, SFS as well as CFS, right, then include segment information in consolidated financial statements only, right? So in the CFS, it is mandatorily required. If CFS is not prepared, then it is required to be included in the SFS. Voluntarily, any entity who is preparing the India's financial statements voluntarily, it has to apply India's 108 in its entirety. No exemption, no exceptions, no relaxations at all, right? So that's the scope of the standard, right? So any company preparing the India's financial has to make these disclosures, right? So that's what about the core principle, objective, and scope. Now we will discuss how we are going to identify the operating segment, right? So as I mentioned previously, that it is altogether different the way we were identifying the operating segments under the ICAI, right? Now here the standard says we need to follow the CODM uh, approach. What is the CODM? Chief Operating Decision Maker. If you want to note it down, because I will be using the short form in my entire session. So CODM means Chief Operating Decision Maker. Chief Operating Decision Maker, right? Now, first of all, instead of identifying the segment, first of all, we need to identify who is the CODM of the company, right? Is it a CFO? Is it as a director? Is it a board of directors? Is it a managing director? It is a executive director. Who is the person who is actually is the chief operating decision maker, right, of the company? Correct. Now, what do you think? Who is the CODM in a company in general? Any guesses? Who is the person? Looks like who is the chief decision maker
Who,
in the
re-
company?
yeah, who review that matters and to whom it is reported?
Performance reporting. Okay.
Yes,
So that could be a person, for example, any chartered accountant who is hired by the company to prepare and review the individual, performance reports. Then will that person be the chief operating decision maker?
yes, sir.
Okay. Any other answer? Any other thoughts?
I think it would be the CEO or the board of directors.
You are saying it would be the CEO,
Yes.
right? Or board of directors? Okay. Any other? So standard says chief operating decision maker, CODM, is the person who has the highest level of management responsible for resource allocation and the performance assessment, right? So the I think somebody has said that who reviews the performance. So that was partly correct answer, right? Performance assessment is required, right? But the key criteria is the resource allocation. Who has the power to allocate funds for a particular project, right? Allocate resources, hire people, hire management personnel, right? To manage that business line or product line, right? Opening or closing of a factory decision is taken by him, right? So, whatever the crucial strategic and operating decisions are there in order to operate a business successfully, all those decisions are taken by this person. So, that person is the CODM. And how he is taking those decisions? By looking at how the performance is coming, right? From that business. So if they are satisfied with the performance or if they are bullish about the future prospects, right, basis on their market research, right, then they will identify and allocate funds, resources, do the hiring, open the new factories, new outlets, or whatever decisions, right, are required to make that product line or business line successful. They will take those decisions basis on some performance assessment, how the that business is performing, right? So if they are getting confidence, they will, you know, uplift that business line. If they are not getting confidence and they are not very bullish about that particular business or product line, then they will not allocate the resource. So this is the decision of allocating or non-allocating resources in the present and the future is taken by this person, right? So that person is regarded as the chief operating decision maker in the company. Now, standard says CODM is a function, not a title, right? So CODM could be a single person or a group of persons or a committee or a body which is empowered to take all these decisions, right? So it could be the MD, it could be the JMD, Joint Managing Director, it could be the chairman, right, of any committee, it could be the CEO, right, or it could be the CFO, right, or it could be any other executive director, right, etc., etc., right? So standard says no designation is specifically called out as the CODM, right? So we don't know who these people are carrying all these fancy, titles. So we don't go by the titles. We will go by the function. Who is actually functioning this to happen, right? Who is reviewing these performance reports? Who is finalizing or approving the decision to allocate the resources or further resources to this particular segment, right? So that person would be the CODM, Chief Operating Decision Maker, right? It could be any body or a committee or a single person, right? Or a group of persons, right? So if suppose there is a committee formed who includes the CEO, right? CFO, right? And Director Finance, right? So these three people are grouped together to form and take the decisions about the future course of action, right? So they will read the performance reports, right? And then they will mutually decide the resource allocation. Then who would be the CODM? The CFO, CEO, DF, or the committee of these three people?
Committee of
Committee
Committee
of
of
all these people.
Correct. So committee of these three people would be regarded as the CODM. Now we are not looking at independently to the CEO or CFO or DF. We will say what are the resolutions or meeting minutes of these committee. Please share those minutes of meeting, and from those minutes of meeting, we will try to investigate to which business segment they are going to allocate the resources, which business segments actually they are reviewing at, right? So basis on that, we will understand what are the operating segments of the company which the company focuses upon, right? a reporting entity can have only one CODM, of course. So if there are two CODMs, three CODMs, then to whom we will refer, right? So whatever the group of people are there, so that group of people would be regarded as the single CODM, right? So instead of we call it out, COE is also CODM, CFO is also CODM, DF is also CODM. No. So if these three people are independently performing any other actions, right? So those are outside the purview. But when these three people meet together, decide upon on something, right? So those meetings which they are coming up together to review the segments and finalize the future course of action, those decisions are to be taken care for the purpose of this standard, and the group of these three people would be regarded as the CODM, right? Now, in very first place, why we are identifying the CODM while the standard is requiring the segment disclosure, and we need to identify the segments only. Then what is the purpose of understanding who is having the authority to take all these decisions in the organization, right? Any doubts anybody is getting around this? That instead of talking about how the segments needs to be identified, why we are talking about that who is taking the decision in the company, who is the CODM?
Yes, I think uh, why
Mhm.
CODM is required.
Right. So why CODM is required? So that is the doubt, right? So why we are talking about this CODM? What is the purpose? Anybody? Any guesses?
Sir, I think what the management will think as a segment information,
Hmm.
it can be then reported as a segment operating.
Correct. So this standard says, boss, you sit and relax. You don't need to do the brainstorming in order to understand what are the operating segments of the company, right? You don't do anything. You simply walk in the company, find who is the CODM, and take the minutes of the meeting of those CODM meetings, right? And understand which business lines, which product lines the CODM is looking at, right? Suppose, let me take an example. Again, let me back to the Reliance, right? Right. Now, Reliance, suppose has these three people as the CODM, right? They have identified, right? Now, these three people are meeting, say, every month or every quarter, and they are looking at the performance of, suppose, oil business, right? Telecom business, and suppose textile business, right? In general, while there could be many other businesses as well, but they are looking at purely on these three businesses every time, right? So what they look at, what is the revenue of the oil, right? What is the expenses, and what is the net profit, right? We are deriving, right? Similarly, for these businesses as well and these businesses as well, right? Now they see that oil is performing good, telecom is performing good, but textile is not performing very good, right? So let's not allocate resources, any further resources for the textile, but let's allocate more resources for oil business. Let's find new oil wells and install new oil rigs, right? So they have allocated some more resources for the oil business. Similarly, telecom, they are finding that India is now shifted on 5G largely, and it will increase the average revenue per user, ARPU. So let's focus upon telecom more. And textile, because there are many competitors in the market, this is already cluttered market. Let's not invest further in the textile, right? So whatever it is doing, let it do, right? Now, basis on these limited information which I have just presented, what do you think? What are the operating segments of the company?
I think all the three are the operating segments.
All the three are operating segments. Any other thoughts? Unanimous? Everybody's aligned that all the three are operating segments in this case? Okay. So because the management is purely focusing upon on these three businesses, right? Although there are many more other businesses as well, but this management is not focusing upon them. They are not getting their separate profitability, separate P&L, separate balance sheet on a monthly basis for their performance analysis. They are simply focusing on these three businesses, and they are finding more opportunities into these three businesses, right? And they are taking any resource allocation decisions for these three businesses in general, right? So as per this standard, these are the three operating segments, right? Because we will step into the shoes of the management or the CODM and see how the management sees the company, right? So that should be the idea of this standard. So instead of we deciding what are the important segments, what are the highest revenue generating, business lines or product lines, no, we don't need to do that exercise at all, right? So we simply follow the management steps. So if management is focusing more on these three businesses, then we will also say that these three are the operating segments, and whatever the other businesses are, all those will be combined together, will form the fourth segment as others, right? Right? So these are the three segments plus others, and the total of these will tie to the P&L of the company, right? So this is how we will structure our segment disclosures. Now, among these three segments, I mentioned that management is only allocating resources for these two, and they are not allocating any resources for the third one. Then, does that impact on the identification of operating segment? No. So standard doesn't say that resources needs to be allocated. It says management responsible for resource allocation, right? So there shouldn't be any confusion that unless and until the resources are allocated, that segment is not a operating segment. No, allocation is happening or not doesn't matter. The only thing matters is performance is being analyzed, and the decision is taken by this UDM to allocate the resources or not to allocate the resources, right? So that is enough. So it's not important that some resources certainly needs to be allocated in order this business to be qualified for the operating segment. No, operating segments are those segments which are being analyzed by the management for future course of action, right? Now, coming back to these three segments, among these three segments, are all these three reportable segments, reportable operating segments?
Yes.
Yes. So whatever the operating segments management is looking at, all are reportable. You mean to say, right? No. So just by virtue of management is analyzing the performance of these three operating segments, it doesn't qualify for these three operating segments to be a reportable operating segments under this standard. So standard has certain reporting criteria as well, right? So if any segment is having greater than 10% of the overall revenue of the company, right? Or greater than 10% of the overall profitability in absolute terms, or greater than 10% of the asset size, either of the condition is met, any one of these three conditions, then only that segment becomes a reportable, right? So first step is to identify the CODM. Once we are done with the identification of the CODM, chief operating decision maker, then we will see which all segments the CODM is looking at. Then those segments are the operating segments of the company, right? Then among those operating segments, once we will check the criteria of this 10% condition, which we will discuss today itself towards the end of the session. Once these conditions are met, then only the reportable segments are coming out of this list, right? And only those segments will actually go in the form of disclosures in the financial statements, right? So all the operating segments which management is looking at may be reportable, may not be reportable. That is dependent on the criterias given by the standard. Is that clear?
Clear. At the end, they are doing the same thing, the 10% criteria, which was
Right. So
done in
at the
AS
end,
17.
right.
So what is the
Okay, very good question. So what is the difference? IGAP में भी तो यही कर रहे थे, right? We have been doing the same thing in the IGAP. The same three conditions: greater than 10% of the total revenue, greater than 10 or greater than 10% of the profit or loss in absolute terms, whichever is higher, or greater than 10% of the assets, right? So these are the same three criteria which we were following in the IGAP. But in IGAP, what we were doing, we were identifying purely basis on these criteria the operating segments, right? But we were not
yes,
looking at where the management is interested, right? Now let me make it clear with an example. In the same example, Reliance, suppose 50% revenue of Reliance comes from say from the oil, right? Because that is the legacy business, right? So anyway, because it is so significant, it will be monitored by the management anyway. But in a super hypothetical situation, I am assuming that the CODM is not worried about the oil business, right? Let me take this hypothetical situation, although it will not be there, but let assume, right? So CODM is not reviewing the performance of the oil business. They are not worried about, right? So in their any of their meetings, they are purely focusing on the telecom and the textile and say one more operating segment, right? And they are not looking at the oil. Then by virtue of this standard, this segment will not be regarded as the operating segment. And once, because this is not identified as the operating segment, it will anyway will be out from the reportable operating segment, because among these operating segments which the management is looking at, we are going to apply the threshold conditions, right? If management is not looking at a particular segment, then because it is not in our list of operating segments, so we will not apply the threshold. But in IGAP, because we were not doing this management approach exercise and we were applying the threshold directly to all the operating segments directly, right? So we always end up, classifying oil business as a reportable segment. But in India, because this is not coming in our operating segment list, so it will anyway be out of the reportable operating segments. So that is the difference in the approach, right? Although I have assumed that because it is contributing so significant revenue, it will definitely be on the radar of the management, but any other segments which are contributing more than 10% but are not on the radar of the management will certainly not find place in the reportable operating segments under the NDS. Is that clear?
yes, clear. So in spite of 10% criteria, management may decide not to report it
No,
as
no,
a
no, no, no,
segment.
no, 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 no. 10% criteria needs to be applied only on those operating segments which management is already analyzing or performance is being reviewed, right? So if management is not reviewing the performance of a particular segment, in spite of the fact that segment is contributing more than 10% of the revenue condition is meeting, that segment will not be reportable segment under the NDS, right? So it is not a choice, right, that management can choose. So the approach is which all operating segments management is looking at, among those which are meeting the threshold criteria also will be reportable.
Right, sir. Even though that 10% criteria are met, the management, if not interested on reviewing those items, then it is not reported.
Correct. So if management is not doing the performance reviews throughout the year for a particular segment, and that segment turns out to be having a more than 10% revenue condition met, or the 10% profitability condition met, or the 10% asset condition, any one of the three condition met, then that segment will not be classified as a reportable operating segment for the purpose of this NDS. Because this NDS says whatever the operating segments are being analyzed by the management regularly for their performances, which are on the radar of the management or the CODM, right? And among those, which all segments are meeting the 10% condition criteria are reportable. Is that clear?
Yes, sir.
Yes,
Yes, sir.
so it is other way around.
It is other way around, right? So under the ICAI, what we were doing, we were simply seeing which all segments are meeting the threshold and all those are reportable, right?
Yes,
Here
sir. Yes, sir.
But
we sub
Straightforward.
management.
correct. But under India's, this is not the way. So we will not ask the complete list of segments. We will ask only the list of those segments which are being reviewed by the CODM regularly, right? So out of the 10 segments, suppose 7 segments are only reviewed. So among those 7, suppose 5 are reportable basis on the threshold. Then 5 are reportable as per the India's. But those 3, even if any segment in those 3 is meeting the threshold criteria, will not be reported.
Here, that CODM will play the major role.
CODM will play the role, right? And it's not about CODM, it's about the intention of the standard. Now, how standard wants users of the financial statements to see the company from the lenses of the management. Is this making sense now?
Yes, sir.
Because standard believes that management is always more intimate, more knowledgeable than any other outsider. Is that correct about the company?
Correctly.
Right?
Correct.
If
Correct.
management is not focusing upon on a particular business line, then why the investor should be worried about? Because management who is running the show is not worried, then why the investor should be worried? And if we report that segment which management is not worried, it means we are unnecessarily including irrelevant information in the financial statements, and we are just wasting time of the users to read that. Is that clear? Making sense? Right? So standard wants only those information to be included in the financial statements which are actually relevant and more important as compared to what other information was there, right? So instead of flooding the financials with unnecessary irrelevant information for the user, let's filter out whatever is not important for the management, then filter out that piece of information from the financials or disclosures, right? So that is the core intention of the standard, that this standard wants that users will get the relevant information instead of all the information, right? Clear? Okay. Intech Executive Committee comprises CEO, CEO, and the president. Committee assesses performance and makes the resource allocation decisions. Each committee member has a single vote. In this case, this committee is the CODM, correct? So whatever the committee is looking at, right, whatever the resolutions are passed by this committee will form the basis for us to identify the operating segments for our financial statement preparation purposes. Fine.
Fine, sir.
Now, we have understood now CODM, right? Now, what operating segment means? So, standard says operating segment is a component of the overall company or overall business or overall entity that engages in business activities from which it may earn revenues, right? And incur expenses, right? So any business line from which the revenues can be earned and the expenses are incurred, right? So that is a separate component within the overall entity whose operating results are reviewed regularly by the CODM. right? So as I previously mentioned, there could be 10 segments, right, which may earn revenues, which may incur expenses separately, but out of those 10 operating 10 segments, only 6 segments are being reviewed by the CODM. Then operating segment would be 10 or 6. What do you think? 6, right? Because CODM is reviewing only 6 segments out of the 10, right? So
Sir,
there,
and then we will take the threshold criteria and 6 only.
correct. So 6 segments are the operating segments. Now we will apply the threshold criteria on these 6 to identify the reportable operating segment, right? And suppose 5 segments are meeting that criteria, then 5 will be the reportable, correct?
Yes.
Correct. So this is
Correct,
the flow, right? So there could be 10 components. Out of those 10 components, only 6 are being reviewed by the CODM. So those 6 become the operating segment. Out of these 6, we will check the threshold. If all of them are meeting, then 6 are reportable. If 5 of them are meeting, 5 are reportable. If 4 of them are meeting the threshold, then 4 of them are reportable, right? So how many segments ultimately will be reported in the financial statements depends on the threshold on the list of those segments which the management is looking at, right? Not all the segments of the company, correct? And the third condition, so there are 3 conditions: number 1, number 2, and number 3, right? Number 1 is a component. There is a separate component which may earn revenues and incur expenses. Third is CODM is looking at the performance and taking the decisions to allocate resources or not to allocate resources. And the third is the discrete financial information about this segment is available, right? Now, first 2 conditions are understood, but what the third condition is? Discrete financial information is available. What do you mean by the discrete financial information? Okay, what do you mean by the financial information? What is the financial information?
The financial statements.
Financial statements. So you mean to say financial information means financial statements? Are we preparing the financial statements for a component, or we prepare the financial statements of the
No,
entity?
entity.
Entity. So what do you mean by financial information?
What is the revenue? What is the expenses? What
Correct.
related expenditure and related income?
Right. So financial information means information about the financial operations of that component, right? So if this component is earning some revenues, then that revenue ledger is available. That revenue GL, we can vouch which all revenue transactions have happened during the period, and we can vouch it for a component separately, right? So revenue information is available. Then what all expenses are incurred in order to generate these revenues? What are the cost of goods sold? What are the depreciation? What are the other expenses, right, for this component, right? So those expenses are also available, and then final profitability can be derived for this component. So that is called the financial information. Even if the balance sheet is not available, at least P&L picture is available, because unless and until the P&L picture is available, what CODM will review in that case, right? So in condition number 2, we are saying that CODM is reviewing the performance assessment, right, of the component. Performance is assessed basis on what? Basis on the revenue, basis on the expense, basis on the P&L, yes or no? Correct.
Yes.
So that is called
Correct.
the financial information. So financial information doesn't mean the complete set of the financial statements being prepared for this component, but it is a mere information about how much revenue it has generated, how much expenses it has incurred, and what is the profit or loss position for this component business, right? For example, Hindustan Unilever. Hindustan Unilever. How many products Hindustan Unilever sells?
Innumerable.
Numerous, right?
Yes.
Not countable, right? Lot of food items, lot of groceries items, lot of medical supplies, lot of cosmetic stuff, right? Oils, shampoos, right? There are various items. HUL supplies. Now suppose HUL categorizes all its products, say, into 3-4 categories. For example, it categorizes food and beverages, right? Where biscuits and Coca-Cola like beverages, right? Whatever the HUL is selling can be categorized. Then it categorizes the groceries separately, right? If there are any. Then the third is suppose medical supplies, right? And suppose fourth is other cosmetics, right? Shampoos, toilet soaps, bathing soaps, right? Oil, hair oil, all this stuff. Suppose for the sake of simplicity, there could be many more. These are the products and these are the 4 components in which the HUL assesses its performance, right? Now, out of these 4 components, suppose food and beverages, grocery, and the cosmetics, right? These are the 3 components which CODM reviews, right? In general, right? And out of these 3 components, suppose only 2 are meeting the threshold criteria. Then how many are reportable? 2?
Only two.
Only 2, right? But how many are operating segments? 3. So operating segment is the segments which are reviewed by the CODM. So 3 operating segments the company has, right? But 2 are reportable. So 2 are being covered in the financial statements for the disclosure purposes. Now, but how many components the company has? 4. Correct?
Yes.
Correct. Now, suppose financial information about a particular component, suppose cosmetic, is not available. So cosmetic revenue, cosmetic expenses are not separately tracked, right, or accounted for by the company. Then whether the CODM will be able to do the performance analysis for this particular operating segment?
No, sir.
No, because CODM will not be able to do the analysis of this operating segment. In that case, it means CODM is not reviewing this segment separately. Correct?
Yes, sir.
So in that case, how many operating segments are there? 2. And how many reportable? 2 only. If both the 2 segments are meeting the threshold. So discrete financial information is available is one of the condition by which we draw the certainty that the management is actually doing the performance review, right? So if CODM says that they are doing the performance review of this segment and we found that this segment doesn't have the financial information available at all within the SAP or the ERP of the company, then how the management is reviewing? Not possible. So it means management is simply doing some high level review or high level talks around that segment, but they are not having any financial information in hand which is actually reviewed. And in that case, because of the absence of the financial information, we cannot conclude that CODM has actually reviewed that segment. And once we establish that CODM has not reviewed or not analyzed the performance, then this will not be regarded as the operating segment, right? So this is the chart. Question number 1, component is able to earn revenues? If the answer is yes, we will proceed further. If the answer is no, then this is not a OS, not a operating segment. Then if the answer is yes, yes, this component is able to earn the revenues independently, then whose results are reviewed regularly by the CODM. So CODM has a focus to review the results of this segment. If the answer is no, then this is not a operating segment. If the answer is yes, then discrete financial information is available which CODM actually reviews. The answer is no. Then again, this is not operating segment. If the answer is yes, then only it will be a operating segment. Correct? So operating segment is identified basis on the three conditions met. Number one, it is able to earn the revenues independently. Number two, CODM is it is on the CODM's radar. And three, the discrete financial information is available. So if these three conditions are met, then only this will qualify to be one of the operating segment. And now this operating segment will be reported or not in our financial statements disclosure. That depends on the threshold criteria met, right? So this is how we are going to identify the operating segments under the Ind AS. Is that clear?
Sir, here the first point, the component being able to earn revenue. Revenue is there. Sometimes the losses will be also be there, right? The net loss.
So revenue and loss are two different things. Revenue means the sales. Loss means revenue minus expense. It is a profit or loss. So revenue and loss are not comparable to each other.
Oh, okay, sir. Here the thing is only the revenue. They are not talking about the net effect.
Yeah, so they are not talking about the profit. They are talking about the revenue. Are you able to generate sales? Yes or no?
Oh, okay, that is the first question, right? Okay, sir, got it now.
Got it? Okay. What is the discrete financial information? So standard throws some guidance on this as well, so that we don't, just get confused. The financial information which is made available to the CODM for their review, right? So this is the discrete financial information. Balance sheet is not always necessary. So even if the balance sheet is not available for a particular segment, then no issues. It is fine. It is still regarded as discrete financial information is available. But availability of information regarding the revenue and the operating profit or operating loss would suffice in this case or in many cases, right? So if the revenue information is available and the profit or loss position is available, then this is sufficient to meet the condition of discrete financial information availability, right? So that's the standard says. So discrete financial information doesn't mandate for balance sheet. So balance sheet is not available, no issues, right? But at least revenue information, expenses information, so that profit or loss can be derived for this segment. At least this piece of information is available and presented to the CODM. That is sufficient to say that discrete financial information condition satisfied. What are the operating segment features? So operating segment could be managed by a person which will be regarded as the segment manager, right? Yes or no? So
Yes, sir.
if there are different operating segments, it is not possible for the CEO or CMD or the CODM to look at all the segments very frequently. So they can hire some professional managers to manage those segments. Yes or no? Yes. So this segment manager is a function, not a title, right? And suppose the CODM gives power to this manager to do all the performance reviews and take the decisions of resource allocation. Then this segment manager will help the CODM, right?
Yes, sir.
Right. So this is just a person who is facilitating this process to happen, right? So it is not to be confused that because the segment has a segment manager, so then segment manager would be the CODM, right? So CODM would be the person who is analyzing the performance and taking the resource allocation decisions, in spite of the fact this segment manager is doing it for and on behalf of the top level management, right? Because he is hired for that very purpose, right? Segments can include but not limited to startup operations even before earning revenues. Now the things are getting tricky. अभी तो हमने पढ़ा, just now we studied that condition number 1 is component is able to earn the revenues, right? If the component is not able to earn the revenues, then it will not be meeting the definition of the operating segment, right? And now standard again is saying that if company is starting up or is a startup company, right, or company is starting up into some new business over and above what other businesses it is doing, right? For example, AI, artificial intelligence. Tomorrow Reliance enters into the AI business, right? So AI would be the focus for the CODM, yes or no?
Yes, sir.
Yes, because it is a new business. But is it AI generating any sales today?
No. Not now. Maybe in future.
No. Is it not generating business? And there is a team, constructed to lead the AI business, right? Now CODM is focusing upon, they are hiring the best software engineers from the market, and they are setting up the data center. They are doing a lot of resource allocation in order to set up this AI business, right? And they are regularly meeting and performing some analysis around how AI business can be uplift, right? Now CODM is focusing, but AI business is not generating any revenue. So as per this chart, what do you think? AI business is a separate operating segment, yes or no?
Yes, sir. Since it is a startup operation, it is includable.
Okay. So you are saying it is a startup operation and hence it is a operating segment even if it doesn't earn the revenues, correct?
Yes, sir. And
Right.
also it is reviewed by the CODM.
Right. So anyway, the component is being able to earn the revenues. So if we read the word correctly, it is not saying that components should be generating the revenue. It is saying components should be able to generate the revenue, right? And if the AI business is not able to generate the revenue, then do you think any prudent person on this planet will get into the business who they feel that they will not be able to generate any revenues? No, right? So ability to generate the sales or ability to generate the revenues is a prime condition for any person to enter into that very business, yes or no?
Yes, sir. That is a main objective of the business. To
Correct,
earn the
correct,
income.
correct. So that's why standard is clarifying here that if the management or any company who is entering into or venturing into any new product line, any new business line, and as of today, even if that product line or that business line is not generating any revenue, then that doesn't mean that would not be regarded as the operating segment, right? So standard says segments can include but not limited to the startup operations, vertically integrated operations, or jointly controlled entities and the associates, right? So any JVs, like you must have remembered that earlier Bharti Airtel and Vodafone were into a JV, Indus Towers, right? So Indus Tower was the JV for these two companies. So that JV is also to be qualified as an operating segment. or any other associates where we have significant influence within the group, those associates, if they are engaged in altogether a business line or product line, right, which they are managing independently for the company, those will also be regarded as the operating segment. So operating segment doesn't have any limitation of a legal entity setup, right? It could be within the same company, or it could be in the form of the JV, or it could be in the form of associate as well, right? So it is not limited to any product line only, right? Not necessarily a single basis of segmentation. Multiple types of the segment information we need to consider. For example, what is the nature of the business the component is carrying on, existence of managers and management planning material about those business, and information presented to the board of directors, right? So we need to see that CODM is actually doing some concrete steps about setting up this new business, and they have done some meetings throughout the year. There are enough material is available in the form of email exchanges, in the form of minutes of the meetings, where we could draw a reference that yes, this is on the radar of the CODM, right? So that is all judgmental and subjective work which we need to do before we coming up with the list of the operating segments for the company basis where the management is interested in, right? So the whole idea in this standard is we don't need to apply overheads in order to identify the operating segments. We will simply ask the CODM, please let us know which segments you have identified as the operating segments which you are regularly monitoring, right? And basis on that, we will get into the list of those segments, and then we will apply the threshold rules for our financial statement reportable operating segments, right? Now let's do this question. An entity uses weighted average cost formula to assign costs to inventories and the cost of goods sold for the financial reporting purposes, but the reports provided to the chief operating decision maker CODM use the first in first out method for evaluating the performance of the segment in operations. Which cost formula should be used for India's 108 disclosure purposes? So what's the question? The question is, company is preparing the financial statement, right? Where weighted average cost method is being applied. And company is preparing the financial information for CODM, right? Where the FIFO method is applied, right? Now, for the purpose of financial statement disclosures around the operating segment, whether the operating segment disclosure should be based on the FIFO or should be based on the financial accounting policy adopted in the financial statements. That's the question.
Sir, financial policy adopted in that while presentation
There's
was mentioned.
financial information available to disclose.
See, this is for he is reviewing only. For his review purpose, he can be do anything. But at the time of presenting in the financial reporting, the what the company is following the policy, that policy to be presented in the financial. This is what I guess.
Okay. Let's read the answer, and it will be an eye opener. The entity should use first in first out method for its Ind AS 108 disclosures, even though it uses the weighted average cost formula for the purpose of measuring inventories and accounting in the financial statements. So accounting in the financial statements will be done basis on what is the accounting policy, but disclosures under 108 will be done basis the policy followed for the CODM review. Digested, not digested.
Okay, sir. Digested, sir. Since the CODM is given the more importance on the standard, so that is taken care. That is what. Okay.
Correct. So this standard has nothing to do with our accounting policies, right? So this standard is saying, boss, we will tell the same information to the users which the management is aware about or management is looking at, right? So it is a standard which is simply leaking the crucial information to the investors in the form of disclosures which management actually looks at during their performance reviews about the company, right?
Okay, sir. It's about only the disclosure. The thing is that the company
Correct.
can present in the weighted average. Here only the reconciliation is needed and they can
Correct.
disclose it. Okay,
Now,
fine.
now, thumb rule. I'm just noting it for all of you. You also note down somewhere on your writing pad. Financial statements will be prepared as per accounting policy, right? 108 disclosure will be made as per CODM, right? So we are not going to alter the accounting policy or the P&L or the balance sheet, right? Basis on the CODM policy. But 108 disclosure will be made as per the CODM review reports, right? Even if a different accounting policy, different accounting method is used by the CODM, right? One more thing. Once we are making these disclosures in the financial statements, then reconciliation is also required. reconciliation. Reconciliation between the FS and the CODM, right? Suppose FS is prepared basis on the weighted average and disclosure is under 108 is made as per the CODM, then we will say that as per the FS, the PNL is this, but there is a change in accounting policy. Inventory is valued at FIFO. So FIFO plus minus adjustment, weighted average plus minus adjustment, and the closing. And this will be tied to the balance sheet or PNL, right? Understood? So, three things. Financials will continue to be prepared basis on the adopted accounting policies. No issues with that. No doubts about that. But within those financials, disclosures for the segment information under Ind AS 108 will be made as per the information reviewed by the CODM, even if different accounting policy was followed for the CODM review, right? And then a reconciliation between the CODM and the financial will be given. Is that clear?
Clear.
Yes, sir.
हो जाएगा
Now,
ना, ये सारा काम आसान है ना? It's easy.
yes, sir.
Yes.
Now I understood that it's not operating segment. It's a CODM segment.
So you will call it CODM segment only, right? So that in your examination you will not be confused. You will
Yeah, yeah.
always, so instead of calling this as operating segment, say CODM segment.
Yes, sir.
Okay, let's try this question. Information to assess performance and allocate resources. The CODM reviews the revenue information for each of the three different products. However, information about expense related to these products are reviewed only in aggregate. Should the three operating segments be identified or the one? So the question is, suppose there are three operating segments, A, B, and C. For them, revenue is separately available, but the total revenue and then total expense and then total profit and loss is available for the CODM review. Now, what do you think? Operating segments are three or operating segments are one?
Operating segments will be sir 3. Even they incur expenses as a whole for both three.
Three. Review of information regarding revenue only by the CODM without considering the expenses incurred to earn that revenue may not be sufficient for the decision making with regard to the resource allocation and the performance measurement of the segment. Therefore, generally, a business segment about which revenue related information only is reviewed will not be treated as a operating segment. However, where revenue information is representative of the operating results and cost involved is insignificant, review of revenue information only may be sufficient for the chief operating decision maker to take the decisions about the resource allocation and the performance measurement. Now, let's get back to our rule book. What was the rule book? Rule book was company has a component which may earn the revenues, that is able to earn the revenues, right? Results are regularly reviewed by the CODM and discrete financial information is available. And when we talked about financial information, we said it means revenue, expense, and the profit and loss, right? Here it is. Financial information made available to the CODM. Balance sheet is not required, but it should have at least the revenue and the profit and loss would suffice, right? So if you are looking at the performance for a component or the segment, and suppose you are only given the revenue numbers, will you be able to say that which segment is performing better? No, because it might be possible the segment A is earning 1,000 crore revenue, segment B is earning 100 crore revenue, segment C is earning say 10 crore revenue or maybe 50 crore revenue, right? But segment A is incurring 1,200 crore expenses and 200 crore is the loss, right? And segment B is earning 100 crore revenue but only incurring say 5 crore expense and earning 95 crore profit, right? And 50 crore is the revenue and suppose 1 crore is the expense and it is earning say 49 crore of the profit. Possible or not possible? Everything is possible, right? But which segment is performing better will be driven basis on what number? The profit at the end of the day. Because at the end of the day, if the bottom line is negative, then it means the segment is not profitable. And at the end of the day, if the segment bottom line is positive, then segment is profitable. Yes or no?
Yes, sir.
So by looking at revenue number only, will you be able to do the complete analysis which segment is performing better?
No, sir.
No. So that's why the standard says looking at the revenue numbers only, it is difficult for the CODM to analyze the performance and take decisions about the future resource allocation for that segment, right? And hence, ideally, unless and until the expense information and so that profit and loss figure can be derived, it is not suffice to say that revenue only review will qualify for the operating segment. But then again, standard also says if the expenses are insignificant, right, and the pure focus is on revenue, right, then it would be sufficient. So let me take the example to make it better understand. Suppose Larsen and Tubro, this time I'm changing the name of the company from Reliance to L&T, right? So L&T is into the business of construction, right? And software service, right? Suppose these are the two components of the L&T for the sake of simplicity. In construction business, the revenue of the construction business is 50,000 crore, right? And in software, it is 100 crore. Okay. And then expenses are some expenses and then the P&L, right? here as well, and some amount is expense, some amount is expense, and then the P&L. Now, while looking at only the revenue numbers, standard says it is difficult for the management to understand the performance of the segment, and hence, ideally, it shouldn't it shouldn't be regarded as the segment based on the revenue information only, right? So let me put the expense number. Suppose here it is 40,000 crore, right? So how much is the profit? 10,000, correct? 10,000 crore is the profit. And suppose here it is 2 crores and the uh, profit is 98 crore, right? Now, in construction business, management knows that if we are getting more projects awarded from the government or any of the private companies to construct anything for them, then certainly, more or less, whatever is the sales value, right, 80% would be the cost we will incur in general, right? But this cost also dependent on the raw material cost, which is fluctuating. So it may be 80%, it may be 70%, it may be 90 or 95% sometimes, right? And if we do a mistake in negotiation of a contract, then probably the contract can turn out to be a loss making as well. Quite possible in the construction business.
Yes, sir.
Yes,
Fairly
but
possible.
right. But in the software business, management knows that the software we have already developed, right? And it is a plug and play kind of product we have, right? So whoever pays the subscription online, get the software installed on its system or mobile and can use it, and he can continue to pay the subscription fees. And as such, because the software is already developed and ready to use, right? So we will not incur whether it is being purchased and installed by 1,000 users or 10,000 users or millions of users. We will not incur much cost, right? Simple maintenance of the software cost, which is very, nominal. For example, 1 crore or 2 crore annually, and our revenue is the only driving factor to decide whether the segment is performing good or bad. Then in that case, because the expenses for this as component is not at all important to look at, and hence expense information is not reviewed or available even, and profitability information is also not available. Because expense is not available, how we will derive the profit? So neither the expense nor the profit is available. Management is simply asking everyone in its meeting as a first question, what is the revenue from the software? And the person replies, sir, last time it was 100, this time it is 200 crore. And management, is feeling very happy and confident. So is this enough or not?
Yes, sir. Even though in this question, this none of them are operating since the financial information is not available.
So
Can
my
I say
question
that?
is, without expense information, without the profit and loss information for the software business, where the key driver or key performance driver is only the subscription, that is the revenue model, is enough for the CODM to review? Or because expense or P&L information is not available, not reviewed, you will say no, because the expense and P&L is not available, so software is not an operating segment?
Okay, sir. Even though it is reviewed, then we will see the criteria also, the 10% criteria also, we will look into it.
That is a separate piece, boss.
That is
That is the
separate.
next step. Whether we are going to report in the disclosures or not, that is the threshold criteria, right? So threshold criteria is not to be applied to identify the operating segment. Abhi, as of now, we are identifying the operating segments. We are not reporting. So reporting will certainly be done basis the threshold met, right? So that is a separate thing which will come later. But as of now, my question is, because the expense and the P&L piece of information is not available for the software business, will you regard software business as an operating segment or not? Yes, no.
No, sir, because he will not do any review based on that, since there is no piece of information on the financial information.
What financial information is not available? Revenue is available or not?
Only the revenue only is available, right?
Then what the long story I was explaining in last 10 minutes? I was saying because my cost involved is insignificant, that doesn't matter because it is a 1 crore, 2 crore annually, right? The only focus of the management is to see the revenue numbers only, because if revenue is increasing, then it means segment is performing good, right? Because my cost is insignificant and largely fixed, right? So I will look at only the revenue number in that case. So in that case, it will be operating segment by virtue of that, because the cost is insignificant. So no focus is on the.
Okay, sir. So your discussion is understood, but my mind is still not accepting that point. That's what.
No. So let me explain. So standard is trying to make us understand that how the management is reviewing the performance. That process also we need to understand. So if PNL information is critical to review the performance and management is reviewing that, then PNL information is critical. That's why management is spending time to see the expenses and the PNL picture as well. But if for a particular operating segment, because the PNL picture is not critical, it is only the revenue number. If the subscriptions are getting increasing month on month, then it means more revenue, and more revenue means more profitability by default, because expense is largely fixed, not increasing. So operating leverage is getting played in here, right? And management doesn't have luxury of time to see unnecessary details as well in their review. So if expense is not at all material, then why management will say, okay, tell me the expense. So last month it was 2 crore, this crore it is 2 crore 2 lakhs. What, how does it matter to the management? It doesn't matter, right? So management will skip the expense part, will skip the P&L part. They will only see how many new subscriptions are added and how much new revenue is generated, right? So that is the important aspect for their performance review. So in that case, software division will be qualifying for the operating segment, even if the expense or the P&L picture is neither available, or even if available, not being reviewed by the management. But for the construction business line, expense information is critical, and hence if the expense information or the P&L information is not available for the construction business, then construction business will not qualify for the to be the operating segment, right?
Right, sir. Got it, sir.
Right. So that is the process which standard expects us to understand, that how management is doing the performance. We also need to follow the same steps and understand why they are looking at the expense and why they are not looking at the expense, right? Okay. Next question. So let's do this question and then we will have a break. R&D activity. An entity operates in a competitive market driven by the technology. It has a separate R&D department because the company is into the technology business, right? Software development business. So they have the R&D department as well. The R&D department has its own manager who reports financial information to the CODM on a regular basis. So this R&D department is also reporting its financial information to the CODM on a regular basis. And the R&D department may earn revenues if a specific request from some external customers are received. So as of now, the request from external customer is not received, but if received, they can sell the software to the external customer as well. But as of now, they are not selling it, right? Expense of the R&D department are not allocated to any other component within the company, nor there are any intra-group charge for this activity. Whether R&D qualify as an operating segment?
Yes, sir. Of course, we discussed it just now. The thing is that now here the able to
CODM
generate
on a
revenue.
regular basis, sir.
Yeah, CODM is regularly reviewing this, and also that the revenue, the able to earn the revenue is there, but currently it is not there. But the expenses is immaterial. So it is
R&D unit of the company may not have the discrete financial information and hence would not qualify as an operating segment. However, if such information is available, then it may be qualified for as an operating segment. Now, why it is not having a discrete financial information? Because as per the fact says that it may earn revenues if it sells the software to the external party, right? So as of now, no revenues are generated, right? Yes or no?
Yes, sir. As of now, no. In future, yes.
In future, if the customer comes, right?
Yes.
But we do not know whether the customer will come or not. But as of now, the revenue is not generated. Number two, expenses of the R&D department. That is majorly what it will be: the salary of the software engineers, right? Who are doing the R&D. Salary of the software engineers are not allocated to any other components. That means it is not allocated to other components, but it is being separately tracked. How much expenses we are incurring for getting this software developed, right? So there is a cost center maintained separately, right? And it is also not charged to any other components or the intra-group charge, right? So it means expenses are tracked separately, but revenue is not there, right? And by looking at these facts, are you able to get a sense that this R&D department is basically a kind of internal R&D department, right? It doesn't have the authority to sell the software to the external customer on its own, right? So it says it may earn revenues if a specific request from external customers are received, but they are not exploring it as of now. They are not getting into that mode to explore and advertise their product, right? So this is a R&D department within the company who is not into the business, right? So business is being done by the company through some other team. This is only a backend R&D team, right? So backend R&D team is not a operating segment by default, unless and until this is not the backend R&D team. This is the business team who will, once the software is developed, they will also market it. So if that is the intention, then it will be the operating segment, otherwise not. So by looking at these multiple scenarios or examples, what I am trying to do, I am just trying to provide more clarity to you in terms of understanding the process to identify the operating segments, because there is no single thumb rule, right? Here we don't have any specific thumb rule that if this is there, then this is the operating segment. So we have to understand case by case how the management looks at what are the facts, what are the circumstances. Basis on that, we will need to derive the conclusion, right? So there are two situations. Situation number one, when we are in the examination hall, right? And situation number two, when we are in the practical world, right? The only difference between the examination hall and the practical world is that in examination hall, apart from the paucity of time, we also have the limited facts which we cannot, get clarification from anybody, right? So within those paragraph, we need to apply all the information we need to read all the information and apply all our judgments to come up to the conclusion. But in practical world, if we have doubt on anything, we can seek a clarification from the management, right? Or somebody else, right? But that option is not available in examination. So for our examination purposes, right, we strictly need to read this para carefully only, right? If this is the question, right? And basis on this question, it is looking like that this is a backend R&D team, because it says it has a separate R&D department, and the word used in the facts in this question is the department, right? R&D department. So R&D department means the only activity they are doing is R&D. So they are not doing the business. So they are not into the business. They are only a R&D department, right? Looking at from this lens, that this is a backend team who is only trying to develop the software, it is not a business team, so there is no expectation for them to generate revenue, right? So since there is no expectation, this is a backend R&D team, and backend R&D team will not form part of the operating segment, because for the operating segment, revenue either at present or in future viability is required, right? Clear? So that's why answer is also dependent. What I am saying, R&D unit of the company may not have the discrete financial information and hence shouldn't be qualified as an operating segment. However, if such information is available, then it will be or it may be qualified as an operating segment, right? So in this standard, we have to understand the circumstances, facts, and process better rather than simply sticking to a particular rule, right?
Yes, sir. First, we understood the situation, exact
Yeah.
situation. Yeah.
Yeah. So first of all, we need to understand the facts of the case. And because we don't have the luxury to seek any clarification, and we do have the limited time of 3 hours as well, in which we need to complete the paper. So basis on the limited facts, if the facts are super limited and you are getting confused, then you can answer like this. So in this case, what is happening? You are saying R&D unit of the company may not have sufficient or discrete financial information, and hence it shouldn't be operating segment. But if it has, then it will be a operating segment, or it may be an operating segment, right? So if the question is lacking the clarity on the facts, then answer should be a two-way in that case, right? So basis on the facts, you need to repeat certain portion of that in your answer, that if this is the case, then this should be the answer, and this is not the case, then this should be the answer, right? So that examiner understands that you know the concept well, right? Okay. So aggregation step, the step 3, we will start with after we come back from the break. So it's 8:36. Let's have a 10 minutes break, right? So we'll start at 8:45 sharp. Okay. 8 minutes effectively. Thank you. So until now, what we have discussed, let me do a quick recap before we start with the aggregation. So first of all, we have understood what the CODM means and how CODM is very important for the purpose of this standard, right? So identification of the CODM is mandatory, right? In order to identify the operating segments. And CODM means the person who is responsible for taking the operating decisions basis on the performance analysis and the future resource allocation about a particular business line, product line, or component of the entity, right? So that person or group of persons or committee would be regarded as the CODM. Once the CODM is identified, then we will start looking at which all components this CODM is looking at within the company, right? So those components will be operating segments, but there are three conditions: that those components should be able to earn the revenues, those components should be having the discrete financial information, and those components are regularly reviewed by the CODM. So once these three conditions are satisfied, then these are the list of operating segments, right? Within that, basis on certain circumstances, what we have discussed and understood is, even if in case of the new business line, new product line, or the new startup, right, where the revenue is not yet generated, in that case even it will qualify to be an operating segment, provided managed CODM is doing the performance review. Then we discussed that revenue is mandatory and expense and P&L is mandatory, balance sheet is not mandatory, right, as part of the discrete financial information. But in certain cases, expense is insignificant, like in the software uh, business, right? So management might not be much interested and is to spend time in doing the review of the expense piece or the profit or loss piece. They might be focusing upon only on the revenue because expense is insignificant. So in that case, software business division will qualify as an operating segment, right? So this is all discussion we had just now since morning. Now, once we are done with the identification of the operating segments, suppose CODM is reviewing total, all in all, 9 segments out of the 15 overall total business lines or product lines, then those 9 operating segments are the operating segments, right? Now, in those operating segments, we need to identify which operating segments are the reportable operating segments. For that, there is a condition of the 10%, right? And once we are done with the identification of the reportable operating segments, then we will do the aggregate if any of the operating segments are having a common attributes. So that is the step 3, which we are talking about now. Aggregate operating segments. Aggregation is optional and not mandatory. So it is the choice of the management whether while preparing the financial statements, they want to disclose all the segments information, that is all the operating segment information which are reportable, or they want to, make some concise and, aggregate some of the reportable operating segments into one, right? So after this discussion, we will do some practicals as well. So just bear with me for some time. First of all, the criteria is consistent with the core principle, right? What is the core principle? Anybody is able to recall? We discussed this as a very first discussion in our morning.
Sir, user able to evaluate the nature and financial effect.
Nature and financial effect, right? Nature plus financial impact, right? Correct. So if the nature of these operating segments and overall financial impact of these segments, is there, then this is consistent with the core principle, right? If no, then it is not allowed to be aggregated with any other segment. So now we are not talking about the identification of the operating segment. That is already identified. We are not talking about which needs to be reported. That is also done based on the threshold, right? Now, within the reportable operating segments, suppose they are all in all 12 reportable segments. So the company has two choices. Either they go ahead and report all 12 as it is, or They don't want to make their financial statements super heavy. So in order to make it more concise, they are looking at within those 12 to club the two segments or three segments together as one segment, a broader segment, so that number of total reportable operating segments should not be exceeding 10, right? Although the standard doesn't mandate or doesn't limit you to report only up to the 10, you have a free choice. You want to report 300 operating segments as a disclosure, you can go ahead and do that. No issues. The standard doesn't have any issue, right? The only thing is, do we have that level of manpower, right? Or will that disclosure be relevant for the user to read and understand the company's prospect better? No. So information is useful only when it is neither too detailed nor too concise, right? Neither unnecessarily details are thrown for the reader, nor the important detail which ideally should be there is, you know, not given in the financial. So we have to strike a balance between the important segments or information which we are going to disclose or not, right? So to strike that balance, standard is giving a guidance only. So standard is saying, I am not saying that you need to disclose only up to 10 operating segments. That is the suggestive number I am mentioning. So ideally, up to 10 operating segments, it should be enough for a company to disclose the segment disclosure, but you can go certainly beyond that if that the situation or case requires to do so. But if you are getting more than 10 operating segments, just stop and revisit whether aggregation is possible or not. If aggregation is possible and you want to do it, then do it. Otherwise, you can continue to disclose more than 10 as well. And hence the standard says aggregation is optional, not mandatory. Is that clear? Then standard says if you are opting for to aggregate some of the operating segments, right, into one for the disclosure purposes under this standard, then it has laid out certain conditions. Condition number 1, consistent with the core principle. Condition number 2, similar economic characteristics. Condition number 3, similar in any of the following or each of the following. Similar in each of the following, right? So once condition number 1 and condition number 2 and condition number 3 are satisfied, then only aggregation is allowed or permissible. If any of these conditions is not satisfied, then aggregation is not allowed, not permissible, right? So first condition is consistent with the core principle. The core principle is users of the financial statement should be able to understand the nature and financial impact. And if we are clubbing more than one operating segments into one, then whether this nature and financial impact will be understood by the users clearly or not. If this is getting impacted, then we shouldn't be doing the clubbing or the aggregation. And if this is not impacted, then we can do the clubbing or the aggregation, right? Then similar in economic characteristics. What do you mean by the economic characteristics? So economic characteristics are not defined by the standard. So that is left to your professional skepticism. You need to understand what economic environment or economic characteristic means, right? So standard doesn't define what economic characteristics or similar economic characteristics means, right? Then standard says operating segments often exhibit similar long-term financial performance, right? If they have similar characteristics. For example, similar long-term gross margins, similar long-term sales growth, similar long-term return on assets, similar long-term return on capital employed, similar long-term enterprise value divided by EBITDA, similar long-term PE ratios, right? So these are the KPIs, key performance indicators which management uses to analyze the performance of various operating segments. And if management finds that KPIs, that is these parameters of uh, more than two segments, three segments are very common. So suppose, let me come back to the example. Suppose HUL, right? HUL was having a business segment, for example, food and beverages, right? And HUL was having a another business segment, for example, say cosmetic, right? So food and beverage and the cosmetic are two different items. Yes, but if long-term gross margins, sales growth, return on assets, return on capital employed match, then management can think of clubbing these two basis on this economic characteristics. But there are other conditions as well. For example, nature of the product and services are similar. Nature of the production process are similar. Types of the customer is same. Methods of the distribution is similar. And nature of regulatory environment is different, same, right? So if these five conditions are also met, then only clubbing is permissible. So in this example, food and cosmetic, in spite of the fact enjoying the similar economic benefits, assuming same gross margin, same sales growth, same ROA, ROC, etc., are management getting to earn from these two components, will they be able to aggregate these operating segments into the one, calling it as say FMCG? What do you think? Fast moving consumer goods. Aggregation possible in this case? No. In spite of the assumption which we made that they are having a more or less similar KPIs, we have other conditions too, right? Here. And since food and beverages are altogether different products as compared to the hair oil, shampoo, or other cosmetic products, right? So product is altogether different. Nature of product is not same, right? Food or beverages we consume, and cosmetic we do not consume, right? We only use it as a non-consumable items, right? So altogether different products, altogether different production process. So food is being produced altogether by a different production process, and cream, face cream or soap is produced by different production process, right? So that cannot be clubbed together. Types of customers might be same, right? I am consuming the food and beverages as well, and I am consuming the face cream, hair oil, shampoo, and toothpaste as well, right? So customer is more or less same. Methods of distribution might also be the same. So the same product logistics chain, handling all the distributions for both the products. And nature of regulatory environment, again different. For food, it could be different regulator. For other products, it could be a different regulator. So unless and until all these conditions are met, aggregation is not allowed, right? So these are the conditions which we need to qualify first for aggregation, right? Okay, let's do few examples first. We will come back to the theory again. X Limited has operations in France, Italy, Germany, UK, and India. It wishes to apply aggregation criteria on the geographical basis. State how the aggregation criteria will apply for reporting segments in the given scenario. Now, what do you think? Are there 5 segments or less than 5? So, one is France, second is Italy, third is Germany, fourth is UK, and fifth is India. So, 5 geographies companies operating in. How many operating segments do you think, basis on this geographical setup, the company might have?
Sir, they have to separately assess all the informations, whether exchange related or all the political stuff, and these are same or not. Then
Hmm.
they can bifurcate only the aggregation on geographical basis.
Correct. Correct. Right. So they need to understand whether these geographies are having or experiencing same or similar, rules and regulations, laws, political, interferences, and the, uh, economic environments, right? So basis on that, it will be identified. So here is the answer. XY Limited needs to assess and prove that each country possesses the same economic characteristics, right? Factors including exchange control regulations, currency risk, economic conditions are required to be considered. Considering all above factors, it may be possible to aggregate the results of France, Italy, and Germany falling within the European Union region, and the results of UK and India may be separately reported as no aggregation is permitted. So in this case, what is the possible answer? 1 EU, 2 UK, and third India. Correct?
Yes, sir.
So
Total three.
three geographical operating segments is the possibility, right? Instead of having five. So we have reduced from five to three by doing the aggregation basis on the geographical connect, right? That is the European Union, right? Let's do this one. X Limited is engaged in the business of manufacturing and selling papers. Varieties of the paper like adhesive paper, anti-rust paper, antique paper, and art paper are manufactured and sold by X Limited. State whether X Limited should classify these papers into different operating segments, or it has the opportunity to do the aggregation.
They should be aggregated because of the nature of the products.
So nature of product is
paper.
Nature of product is same, right?
Yes.
Because it is paper. So paper is the nature, or the usage of that paper is the nature.
Sir, I think the nature should be of paper and it should not be reported differently on the basis of usage and all it.
Okay. So you mean to say the paper on which you are taking a financial statements printout, the A4 size paper, and adhesive paper, which is used for adhesing something, or the art paper on which the drawings are painted, are all interchangeably usable.
I am not saying that they are interchangeably usable, but
sir,
they are of the same category or nature.
So product is different or product is same?
Sir, here I mean the nature
Product
of
is different, sir.
product is different, sir. Adhesive paper, the usage is totally different. It will be used for the coat, the stamp paper like that.
Correct.
That anti-rust paper, the usage is totally different, and the production process also altogether different. It's not the same process. Antique paper and art paper, the also I could see the customers also different. The same person they will not use. I think it has to be reported separately, I feel.
Right. So product is different. The purpose of this paper is different. Manufacturing process might also be different, right?
Yes, sir.
Right.
Yes.
So, and customer base might also be different, right? Anti-rust paper is being purchased by industrialists, right? Antique paper is being purchased by exhibitions and museums, right? Art paper again by museums, adhesive paper by the children in the school, or some home usage, right? So usage could be different, customers could be different, product is different, and production process also might be different, but the common thing is that everything is prepared from the same raw material, that is the paper, right? So paper base raw material might be same, right? So in the examination, we have the limited facts, right? In the practical life, we have the opportunity to discuss more with the management before we conclude on the decision. But in the examination, what we will do? Based on these limited facts, we need to answer, right? Then our answer should be like this. two or more operating segments may be aggregated into the single operating segment if the segments have the similar economic characteristics and the segments are similar in respect to various factors like nature of the product, production process, type of customer, method of distribution, and the regulatory requirement. In case of X Limited, so far as the varieties of paper concerned, if all the factors such as nature of the product and the production process, type of customer, and method of distribution and regulatory information are common, there is no need to create different segments for each type of paper, right? But if the production process is different and that is clearly established, or the nature of the customer is different, or the rules or regulatory laws are different for each product, then it will not be possible to aggregate and they are to be disclosed separately, right? So our answer should be also like this. Instead of giving the full and final conclusion, we should discuss, right? If these are the things, it should be the case. If these are the things, it should be the case, right? Instead of coming out clearly on a one side, right?
Diplomatic way of answering.
Right. So because facts are not clear, no? So if facts are clear, then certainly we will give the clear answer. But if the facts are not clear, we do not know. In the question is silent. Whether the customer is same or not, whether the manufacturing process is same or not, whether the laws and regulations are similar or not, right? Whether the distribution channels are similar or not, right? So it might be possible that for the anti-rust paper, right, my packaging and distribution is different, and for antique paper, which is very costly, my packaging is altogether different, right? And the distribution is also different, right? Antique paper, I receive separate orders from the museum, and order by order basis, I do the packing basis on their customization needs and then accordingly send. And anti-rust paper is common in size and look, and they have a standard packing box which I deliver, right? So it needs to be looked at how the company is operating. And because of the information, that all detailed information is not available within the facts of the question in the examination, I also need to explain the process to establish the answer rather than giving the answer, right? So what I will say, that this is the rule the standard has. So first of all, we need to master on the theory, right? What the standard says. First of all, we write that what the standard says or requires. Then we will say, basis on the facts or circumstances given in the question, there are 4 varieties of paper. Assuming the production process, types of customer, method of distribution, regulatory requirements are common, then the operating segments is not required to be identified or aggregated, and they can be aggregated and not to be identified separately. Otherwise, they cannot be aggregated, right? So first of all, we need to explain, right? So these are the steps. First is consistent core principle, second is similar economic characteristic, and third is nature of the product, type of the production process, type of the customer, method of distribution, and rules and regulations, laws and regulations. So these are the 5 items again which we need to check, and all 5 are mandatory. I have already encircled the word each, right? Each of the following should be satisfied, right? In order to aggregate. And after doing all this exercise, suppose we started with 20 operating segments, right? Now, after running this exercise, we reduced 20 operating segments to say 15. Now, 15 is still greater than 10, yes or no?
Yes, sir.
Then again, on this 15, we will again run this tree. And suppose again, if we are able to reduce it, say 12, then again it is greater than 10. Then again we will run this tree, right? Until we reach 10. If management wants to reduce, and this aggregation or reducing the number of reportable operating segment is optional. If management is fine to disclose 20 operating segments, they can go ahead. Standard is not prohibiting. Clear?
Okay, sir. It's not a musical chair cam. We need to reduce as per this rule.
Right. So it is not mandatory for you to aggregate, right? but it is in the interest of the management as well as the users, because otherwise you will make the financial statements, very detailed and with unnecessary segments, right? Okay. Now let's talk about the thresholds, right? Which are crucial to identify the reportable operating segments from the operating segments list which the CODM is reviewing. So standard says there are three conditions and any one of the condition, because the word used is or, right? Any one of these three conditions, if satisfied, then it becomes reportable. What is that? Condition number one, if the revenue from the segment is greater than 10% combined revenue for all the segments, internal and external, both the sales, right? So 10% of overall company sales, right? Or 10% profit or loss of the operating segment is greater than 10% of the profit or loss of the all the segments in absolute amount, whichever is greater, right? So we will do the numerical around this to understand this. And then the third one, the assets. If the assets of the segment are greater than 10% of the combined assets for all the segments, any of the three conditions are met, then the segment becomes reportable segment. And once the segment becomes reportable, it becomes mandatory for us to report unless and until we are doing the aggregation of this into some another segment, right? Reportable segments, consolidated revenue test. How many segments which we should disclose as a mandatory? So the number of segments constituting at least 75% of the total company's revenue should be disclosed in the form of segment reporting. So what does this condition says? Suppose a company has ABC Limited has say 15 segments, right? Out of these 15 segments, 12 segments have revenue of say 100 crore in total, and the three segments have the revenue of say 20 crore. Then total revenue is how much? 120 crore for the company. 100 divided by 120. What is the percentage? Can somebody tell me?
Sir, it's 83.33.
83.33%, right? So in this case, since my reportable segments basis on other factors are coming as 12, right? And I am still above this percentage 75. So if I want to reduce the number from 12 to 11 or 11 to 12, I can explore that opportunity, right? So suppose if I try to apply the aggregation steps and once all the aggregation criteria or conditions are met, my reportable segment is reduced to 11, right? And these 11 revenue is now becoming 90 crore, right? So 10 crore has gone away from 100 by way of reducing the segment. So 90 divided by 120, what is the percentage now?
75%.
75%,
Exactly.
right? Now the standard says that the revenue of reported segments should be greater than
More than
75%.
75.
More than 75%. So in this case, because I am sitting very exactly on the borderline of the 75%, so it is judgmental call for the management to report 11 or 12. But if we go strictly by the rule, what is the ideal number which we need to disclose? The 12 only. Correct? So in practical life, because we are sitting right on 75% itself, so we can take a call, but as per the standard, it should be 75 greater than 75%, right? So all the reportable segments taken together should constitute at least 75 greater than 75% of the revenue. In that case, it is a good to go. If it is coming beyond 75%, then we can find some aggregation opportunities if available, subject to the rule book of aggregation. And if it is below 75%, let me take another example. Suppose the company has been disclosing say 12 segments, and instead of 100 crore and 50 crore split, so for 10 segments, the revenue was say 80 crore. Okay. And company has 4 other segments for which the revenue is 40 crore, right? So total revenue is 120 crore. Okay. 120 crore. Now 80 divided by 120. How much is the percentage?
66.66.
66.66. Now, in this case, because it is not greater than 75%, I need to mandatorily add one more segment from other operating segment list in order to reach the 75% of the revenue. So that is the consolidated threshold test, right? So let's do this question. Significant Limited has various operating segments. They are analyzing these segments for the reporting purposes as per the provisions of Ind AS 108. Revenue data for the operating segment A is as below. Operating segment A, revenue 40 crores, total revenue including inter-segment for the company 500 crore, segment loss 10 crore, and total segment loss for the company is 90 crore, and total segment profitable. For the profitable segments, the profit is 200 crore, and for the loss-making segments, loss is 90 crore in absolute terms. Operating segment A's assets are less than 10% of the total assets of the all other operating segments, whether segment A is a reportable operating segment. What do you think? In this case, A is the reportable or not? So you need to apply the 3 tests which we have just discussed here and come up with your answer.
Sir, here the segment revenue is 40 is with respect to AS, right? The total revenue including the inter segment is 500. How we need to interpret this, sir? I'm not clear on this table, how to read it.
How much is the percentage? 40 divided by 500.
Okay.
So 8% is less
8%.
than 10%, so not reportable on this criteria.
8 point whatever XX percentage. Okay. So
Eight
it is less
exact.
than 10%. So revenue condition for this segment A is not met, right?
Yes.
Yes, sir.
Then the profit loss condition. So how much is the segment loss? Segment loss is 10 crore.
11.11%.
10 divided by what? 90,
90.
200 or 290 or 110?
90.
90? Sure?
90 only, sir, because we need to consider only loss only. That loss or profit, independently we need to calculate. The point number 2. Absolute amount.
Combined reported profit or combined reported loss. Yes.
Whichever is greater, right? So which is greater here, 90 or 200?
200.
200
So,
is greater.
10 divided by 200 into 100. What is the percentage?
5%.
5%. And the question says segment assets are less than 10%. So third condition, question has
Not
already
satisfied.
clarified. No need to check because we don't have the numbers, right? So revenue condition not met.
So 200 is total segment profit or total segment loss? 200 is.
So total segment loss of the loss making segment is 90. Total segment profit of the profit making segments is 200 in absolute terms.
But yeah, here operating segment A.
Hold on.
Amount is
Hold on,
Total
hold on.
segment. Okay.
At company level, the total profitability is 110. Correct? So company P&L says 110 is the profit. But within that 110 profit, there are few segments which are loss making. There are few segments which are profit making. So absolute loss of loss making segment is 90. Absolute profit of profit making segments is 200. And the standard has drafted the condition this way. It says 10% profit and loss of the segment is should be greater than 10% of either the absolute profit or the absolute loss, whichever is greater, right? So whichever is greater, in this case 90 or 200, the 200, correct? So 200 should be used as the basis to calculate the percentage, and because we are arriving at 5%, so it is not meeting the 10% threshold.
Okay.
All right, sir. Okay, got it.
Clear, everybody?
Yes,
Yes.
sir.
Right? So here is the answer. No, segment A is not reportable segment due to the following reason. So this should be the way in by writing our for writing our answers in the examination. Segment, we need to explain all the three conditions. Segment A does not satisfy the revenue test as its revenue, internal or external, is less than 10% of the aggregate of the internal and external revenues for the all operating segments, right? Then segment A fails to satisfy the asset test as given in the question, right? And the third, segment A's loss are greater than 10% of the total of operating segment loss, but they are less than 10% of the absolute total of the profits of all segments in profit. The comparison required by the standard is with the total profit or loss that is greater in the absolute terms. Hence, A's loss of rupees 10 must be compared with the total for the operating loss or profit, whichever is greater, that is 200. Accordingly, it results into less than 10%. Clear?
Yes, sir.
Perfect. Now you need to do this. So make your calculators active now, right? And come up with the answer. X Limited has identified the following business components: revenue, external revenue, internal revenue. Pharma is one of the segment, FMCG one of the segment, Ayurveda is one of the segment, and rest all other segments are clubbed into others, right? Others. And this is the total for the entity. Okay. This is the total line, right? So, pharma, FMCG, and Ayurveda are the three operating segments which CODM reviews. That's why it is coming here, right?
Yes,
And
sir.
now, among these three, pharma, FMCG, and Ayurveda, we need to apply the threshold to come up with the reportable operating segments, and the data which was presented to the CODM for their performance review is presented to you in this question. So for all these three segments, revenues, profit, and assets are given. And for the total of the entity is also given. You need to apply all the three conditions for all the three operating segments and come up with the reportable. So you have 5 minutes. Try to get your answers ready and then we will discuss.
So I think pharma, FMCG, and others is the reporting
So pharma, FMCG, and
and
others.
others.
So others to anyway is reportable. Otherwise, the reconciliation will not be possible, right?
Yes.
Yes,
So
sir. If you look one by one, the revenue test and profit test are the test.
hmm,
And the revenue test and the pharma is reportable. F and A is not reportable. Others reportable. On the
hmm,
profit line, pharma is reportable. Others reportable. And the asset test, pharma and FMG is reportable. Others not reportable. And overall,
Yes.
A, that Ayurveda is not reportable.
Yes.
The
so,
thing is that the 75% criteria, if you look at,
hmm,
that we need to also look at, right, sir?
right. So first of all, before the final answer, 75%, what are the independent individual answers? So basis on the sales, right? Pharma is carrying 63%, FMCG 2%, and Ayurveda 1%, right? So which segment is reportable basis on the revenue?
Pharma.
Only pharma, correct?
Yes.
Percentage is correct. Everyone has calculated this only.
Yes,
Yes.
sir.
Okay. Then
Yes.
basis on the profits, pharma is 66, FMCG is 8.33, and Ayurveda is 6.77, right?
Yes, sir.
Yes.
So again, basis on profits, which segment is reportable?
Pharma and others.
Pharma and others.
Pharma and others. So others to anyway is there, right? And basis on the total of assets, 61% is the percentage for pharma, 27% is for FMCG, and 4% is for Ayurveda. So again, FMCG is now becoming reportable.
Yes.
Yes, sir.
So all in all, two segments are reportable, pharma and FMCG. Correct?
Right, sir.
Yes.
Correct. So others, so anyway, we have to disclose, right? Because if we don't disclose the others, how we will be able to reconcile with the company PNL? Correct? Or company balance sheet. So that is anyway, the column will be there in the segment disclosure for others. So for others, we don't have the issue. But what are the independent operating segments we are identifying as pharma and Ayurveda, FMCG, because Ayurveda is not meeting any of the threshold, right? Now you apply the 75% test. So for pharma, 75% test is not meeting pharma and FMCG taken together, because how much percentage it translated into? 63 plus 2, 65
65.
or
6.
66.01, right?
Yeah,
I think,
66.01. Yeah, right,
right?
sir.
So it is less than 75%, or rather it
Yes.
is not greater than 75% of the overall revenue for the company, right?
Yes.
So we need to pick up one more in that case,
The Ayurveda will pick it up.
then Ayurveda will be picked up, right? And because we do not have any further operating segments per se, right? Even if we add the Ayurveda, we are not meeting the 75% threshold. Yes or no?
Yes, sir.
So what to do in this case?
We have to report all. That's it.
So right. So whatever the three are there, basis on the CODM, we will be reporting all, right? And along with others, anyway, it will be categorized. But generally, in the practical life, it doesn't happen that you will not be able to reach the 75% threshold, because management is identifying the operating segments basis. At least they are covering the major portion of their revenue, right? So in this case, what is the flaw in this question? In this question, the flaw is the management is not identifying enough operating segments in their performance review, right? Because there are some operating segments which are constituting major revenue are subsuming or hiding within the others, right? Okay.
Sir,
Hmm.
Ayurveda is club in others.
No.
It is not a
Ayurveda is
report. It
Ayurveda
is
is
not
already separate.
reported then.
Ayurveda is already separate. I am saying in others, because we are still sitting with 32% of the total revenue, right? Which indicates that there are one or two major operating segments which management is not reviewing uh, independently, but they are sitting in the others. That's what I'm
Sir,
saying.
sir, my question is Ayurveda, in this answer, Ayurveda segment does not meet any threshold and it
Hmm.
may not be classified as reportable segment.
Right.
So this is not reportable segment. So this figures is club in others.
Yes, yes, yes. So once, correct. So once any segments which we are not reporting separately, it will be added to the others. Otherwise, the reconciliation will not be made.
Okay, okay.
Perfect. Nice question. Okay. Last step, disclose the information. So this is the purpose of the standard, right? For which the entire exercise we have been doing since morning, identifying the CODM, identifying the operating segments they are reviewing, right? And then coming up, applying the threshold, coming up with the reportable operating segments, then finding the aggregation opportunities if possible. And then whatever we are left with after the aggregation, we are to disclose them. But what exactly is to be disclosed? That is now we are going to talk about. So disclose what? Disclose segment information, that is number one. Factors used to identify entities reportable segments, including the basis of the organization. So first of all, we need to explain the entire process, how we have reached here or how we have reached this milestone, that these are the final three operating segments or final seven operating segments which we are going to report. So what are the factors we have considered in order to identify? So we will explain this, calling it that CODM performs the review of these 10 operating segments on a regular basis, for which the discrete financial information was available. Out of these 10, we have applied the threshold and reduced it to 7 basis on the threshold criteria are met. Now, these are the 7 reportable operating segments basis after the threshold criteria. But because 7 was looking very large number of operating segments, so management tried to find the aggregation opportunities, and basis the aggregation criteria met, they have reduced the 7 to 5. So finally the 5 is the number of operating segments which we are going to report in the financial statement. So this entire process you need to disclose, and what all conditions factors you have during your journey satisfied, you need to mention. Then types of the products and the services from which each reportable segment derives its revenue. Now, whatever the reporting is you are doing, or whatever the reportable segments you have finalized, for each of them, you need to explain this reportable segment is doing the food and beverage business. This reportable segment is doing the cosmetic business. This reportable segment is doing the medical supplies business, right? So, what is the nature of the product and service that reportable segment is engaged in? That you need to explain. Then you need to give the table for these reportable operating segments, depicting the revenues numbers, profits numbers, loss numbers, assets numbers, and liabilities numbers, right? So when we say revenue, so it means sales. When we say profit, it means the profit of the segment. So all the expenses are also needs to be presented, and then profits needs to be derived, profit or loss. And then assets and liabilities also needs to be presented in the segment balance sheet in the disclosures. And then reconciliation of our profit and loss or other material items needs to be made with the financial statements. Reinstatement of the previously reported information is also required. So if there was any reinstatement required in the previous year numbers or previous period numbers basis on the new information developed or new reclass which we have done in the current financial year, so those reclass needs also to be done in the previous year or previous period numbers. Standard doesn't give any sort of exemptions, relaxations, or exceptions to any of its disclosures. So all the disclosures, whatever we are talking about here, are mandatory to be disclosed, right? We cannot skip any of them, saying it will, if the competitor reads our segment information, they will, do the harm to the company by strategizing their product policies better, right? So because of competition, We cannot hide any disclosure in our financial statements that the standard is clearly asking us. Then, what all information we will present in the segment P&L? So we will say the profit and loss of the segment, how it was measured. So it is carrying interest revenue or interest expense needs to be separately disclosed. Depreciation related to the segment fixed assets and amortization related to segments intangible assets needs to be presented. Other material non-cash items to be presented. Material items of income and expenses needs to be presented, and entity equity accounted investees and earnings also needs to be presented. Income tax expense for the segment, and then non-current assets, other financial instrument tax, deferred tax, post-tax employment benefits, all these items are also to be presented, right? Apart from presenting the total revenue only, right? So it's not about that we are going to present revenue only. Other all information also needs to be presented in the tabular form, right? And how the total assets and total liabilities for the segment are measured, that also needs to be presented if they are provided to the CODM and CODM was reviewing that, right? So basis on the CODM review only, it needs to be presented. You remember the one question which we have done where the inventory was valued at FIFO method for the CODM and weighted average method in the financial. So in this disclosure, what basis we were going to present inventory at? Basis on the CODM method, right? Correct?
Yes, sir. And also we will provide the reconciliation between that.
Yes.
What is the differences?
Yes. Disclosure, entity-wide disclosures. What are the additional entity-wide disclosures to be provided? These are to be provided only if not provided as part of the reportable operating segment, right? Information about the products and the services of the company, information about the geographical areas in which the entity operates, information about the major customers. So what about major customers? Name, Aadhaar card, PAN card. What we need to disclose? Should we disclose the names of the major customers?
Yes, sir.
No. We don't need to disclose the identity of the customer. Information about major customer needs to be disclosed. Doesn't mean that we will disclose the identity of the customer or the PAN number, Aadhaar number, address, or the firm name or the company name, or any other personal information of that customer, right? The only thing we need to disclose, how much revenue we are driving as a percentage of our total revenue from the major customers, right? So let me do an example on this. But before that, let's study other items. So based on the same information that is used to produce the financial statement. So all these disclosures are to be based on financial statements information. Now, what is required regardless of the CODM use, even if have one reportable segment. So all the disclosures under this standard, right? Whatever we have studied until now, right? All these disclosures are mandatory disclosures, right? Even if the entity has only one reportable segment. So even if the entity does not have more than one segment, the entity itself is a segment in that case. Are you getting me?
Yes, sir.
So even in that case, this information is required, right? So we cannot escape saying that we only have one segment. Why we need to disclose anything? Anyway, our P&L is what we have, but still the segment information means segment information. So we need to say what are the products and services the company is offering, and a limited segment information would be required in that case, right? Now about the customer, information about major customer. What information we need to disclose, right? What all information about major customer we need to disclose? That's the key item which we need to talk, because if the question in examination comes on this piece of disclosure, then it will be about the major customer only, right? More likely than not. Provide information about the extent of its reliance on its major customer, that is revenue from single customer is 10% or more of entity's revenue. The fact, what do you mean by the fact? The fact that company has overall revenue of 10,000 crore, right? Out of which 110 crore revenue is coming from a single customer. So should I say the name of the customer, customer A, customer B, customer C? No. I don't need to disclose the name of the customer. Rather, I will say 110 crore is coming from one of the single customer of the company. One of the single customer of the company. Is that clear?
Yes, sir.
110 crore divided by 10,000 into 100. How much is the percentage? 11%? Right?
Yes, sir.
And 11% is greater than 10%. That's the condition the disclosure has casted.
So
So if,
1.10%.
sorry, add one,
1,000.
add one more zero in that case, 1100 crore, right? So 11% is greater than 10% from a single customer, right? So in that case, this disclosure gets triggered. But if the percentage from none of the single customer is more than 10%, then this disclosure about the single major important customer is not triggered. Clear? Yes, no?
Okay, sir. Even that 10%, even if it is 100 crore also, we need to.
Yes. So even if it is 100 crore, it is 10%. So condition is 10% or more, right? So if it is 100 crore out of the 10,000 crore revenue from a single customer, this disclosure is triggered. But if none of the customer is meeting this 10% revenue threshold, then this information about major customer disclosure is not triggered for that company. Correct?
Yes, sir. I would say the thing is that the revenue test and the asset test, it did 10% or more than 10%. But here 10% is more.
Correct. So here it is 10% or more and only on revenue item, nothing else. Right?
Only on revenue item. Yeah, we need to remember this.
Right.
Yeah.
Then total amount of revenues from each such customer. Suppose a company has 5 customers, each buying 100 crore. Right? Then in that case, all the 5 customers are major customers. Yes, no.
Yes, sir.
Right? Because every customer is meeting the threshold. Right? So in that case, company will say 5 customers are major customers who are buying more than 10% or 10% or more of the sales, overall sales of the company. Right? So our dependency on these 5 customers is significant. Then additional item which we need to disclose is identity of the segment or segments reporting such revenues. So what do we need to disclose? Segment wise revenue from these customers or the name of the segment only in which this customer is making the sales, or from which segment the customer is making the purchase.
Segment only.
Segment only. So word is identity of the segment, right? So suppose there is a company who has say 3 operating segments, and in one of the segment customer is purchasing a high value purchase, and because of that customer is triggering this disclosure 10% of the overall entity's revenue, and then the company will disclose two items. Number one, the fact that we have a major customer who is making a 10 more than 10% of the overall sales purchase from us, and that purchase is from textile segment, or that purchase is from telecom sector, and if it is constituting more than one segment, then that purchase is constituting textile and telecom segment. Understood? But we don't need to disclose the amount for each segment for that customer, right? So neither the customer name nor the amount we need to disclose. The only thing we need to disclose is the identity of that segment.
Okay,
So
only fact only to be reported.
Right. So this is the example disclosure. So example disclosure says This is how we are going to disclose revenue from one customer. One customer means we are not giving the name. Revenue from one customer of the company name, diversified company software and electronic segments represent approximately 5,000 of the company's total revenues. Right? So this is how we are going to disclose. So we will say revenues from one of our customer is significant, right? Approximately 5,000 of the company's total revenue. So our company's total revenue is say 50,000 crore. Out of that, approximately 5,000 crore is the revenue from this customer, and this 5,000 is coming from one segment, two segment, three segment, doesn't matter. We only need to give the name of the segment, electronic and software, right? So we are not giving the amounts per each segment. That software 250, 200 and 2,500 crore, and electronics also 2,500 crore, right? So we are not going to disclose this way, right? So identity of the customer and the segment wise amount are not required to be disclosed, right? No need to report name of the customer and the segment wise revenue. Is that clear?
Sir, what is the main purpose of this particular disclosure, sir? To know where the revenue is heading, like that, identity.
To understand if this customer walks away, then how much dependency company has on a single customer, right?
Yes, that will affect the going concern of this company.
Yes. So suppose if the company has only 3 customers and it is sitting on 15,000 crore revenues, but the customers are 3 only. So if this disclosure is not there, users will not be able to understand that company is highly dependent on these 3 customers, right? And if 6 months down the line, 1 year down the line, these customers walks away, company will be out of the business, right? So that is the sensitivity. Clear?
Yes, sir. Got it.
Okay. So these are the sample disclosures, and which I have extracted from the audited annual published report of HUL, right, for 21-22. So how the HUL is disclosing the segment information. First of all, it says the operating segment is the level at which the discrete financial information is available. Business segments are identified considering nature of the production services, different risk and returns, internal organization and management structure, and internal financial reporting systems, right? So these are the factors they have disclosed. Then once they are done with the segment identification, so they are reporting in the tabular format the revenue from each of these segments. So this is the others category, right? And this is the total revenue at the company level, right? So this is the others category, and these are the 3 segments the company is reporting, right? And the sales are break up into the internal and external, right? So if the company is if the segment is selling these products to the external customer, it will sit in the external column. Otherwise, if these are inter-segment sales, then it will sit here, right? And then the total, and then the previous year table similarly, right? So this is how the revenue is presented, and then the results. So results means the overall revenue, then finance cost, other income, then profit from continuing operations, then exceptional item, if any, profit from tax, profit before tax, then tax expense, current tax, deferred tax, then profit from continuing operations after tax, then discontinued, if any, then total profit, and then non-controlling interest, and then profit for the year, right? So this is how the segment disclosure is prepared, right? Then other information, segment assets and segment liabilities also needs to be presented, right? So we will say for each segment how much the segment assets are, right, and how much the segment liabilities are, right? And then corporate assets, and then total with the company's balance sheet, right? So whatever is not allocated to any of the segments will sit here in either in the others category, right, or in the corporate allocation, right, to in order to reconcile with the balance sheet of the company, right? Then whatever the capital expenditure, depreciation and amortization, or other non-cash expense the company has incurred for these 3 segments during the year, so those needs to be presented here in detail. like this table, and then comparative previous year numbers, right? Then geographical locations as well, companies operating. So it will present revenue by geographical market, India and outside India, and carrying amount of segments, India and outside India. So these are the revenue numbers and these are the assets, right? And then revenue about the major customers. So this is crucial. Let's read it. The group is not reliant on revenues from transactions with any single external customer and does not receive 10% or more of its revenue from transactions with any single customer. So it means Hindustan Unilever is saying that they do not have any customer who has purchased from the company for more than 10% of its overall revenue, right? And hence, because there is no such customer, so the fact is disclosed that we do not have any major customer, right? So if the major customer is not there, this line still needs to be disclosed. Clear?
Okay. Here in this company, the dependency is very less.
No dependency at all, because because they are saying we do not have any major customers, so no dependency. If the company says we have one customer, there is a dependency. If company says we have 10 customers, there is very high dependency on these 10 people, right?
Yes, sir. Yes, sir. This is even though it is not there, we need to disclose it.
Yes,
Yeah,
right.
that is a new point.
So that was all on the disclosures which are required by this standard, and for these disclosure purposes only, the all long exercise we have been doing since morning, right? So once the reportable segments are identified, aggregation is done, then we will report all these disclosures. Now there are certain key gap differences which we will quickly run through, and we will try our hands on some MCQs quickly before we wind up for the day, right? So identification of segment. So under India, it is the CODM approach, and under IGAP, it was primary segment, secondary segment, geographical location, product class, right? All these stuff which we were doing, right? Now, classification into primary, secondary. India's no requirement, AS requires. Then measurement basis, same as the CODM, FIFO weighted, we have studied, but under IGAP, it is to be in conformity with the accounting policies adopted for the purpose of preparation of the financial statements, correct? Then aggregation. Standard gives the guidance basis on what all factors we can aggregate. Standard is silent, no guidance. IGAP, right? So IGAP doesn't provide any guidance on the aggregation, right? Then even if there is a single segment, requires disclosures, but under IGAP, no such disclosures are required. If the company has only one segment, the only fact is required to be disclosed that company has only one segment, right? By way of a footnote, right? And in India's disclosures are more extensive as compared to the IGAP, and this is the common thing in all the indices as compared to their respective counterparts in the IGAP, right? So indices are more robust in terms of disclosure. So they are specifically talking product-wise revenue from external customer, domestic revenue, foreign revenue, non-current assets in domestic and in foreign countries, wherever it is, right? But they here under IGAP, disclosures were primarily for primary segments, and secondary segments were having a less disclosure requirement, right? So this is all key differences between the INDES and IGAP. What is the difference between INDES and IFRS? Only one. INDES says all the companies covered under INDES are required to give the segment information disclosures, but IFRS says only listed companies or in the process of listing are required to present these disclosures. If the company is not publicly listed or not in the process of getting listed, then those companies can skip this disclosure under their financial statements. Is that clear?
Yes, sir. Sir, I have a small query, but it's a, the thing is that the company is not having any business segment as such. See, no difference. But the company is doing only one business. That only one business will be treated as a segment.
Yes. Yes, that's what India says. So India says, boss, disclosure is mandatory. Even if you have one segment, say it. in your financial statements that you have one segment, so that it casts responsibility on the management not to hide anything. Clear?
Clear, sir. The company per se is maybe the only one line of product, only one business is there.
Even then.
Okay.
Now let's test our knowledge, what we have gained since morning. As per India's 108 operating segments, an entity is required to disclose a measure of profit and or loss for all operating segments.
No, false.
False. It is required only for reportable
operating segment.
Right? The revenue of the company XYZ is coming from the transactions with entity D amounts to 14% of XYZ revenues. D is an unrelated third party of XYZ. XYZ discloses the details of each segment revenue coming from the sales made to D. Correct or incorrect?
Aggregate sales, sir. Revenue.
So incorrect now, because
Yes,
segment wise revenue is not required to be disclosed, right, from major customer.
Yes,
sir.
Right? Only the segment name is required to be disclosed. Correct?
Correct, sir.
It's the only fact only to be disclosed.
Yeah. Chief operating decision maker also may be the dash for some operating segments. A single manager may be the segment manager for more than one operating segment. So basically, this is a fill in the blanks. So segment manager, basically the chief operating decision maker, either can manage the day-to-day operations of that segment himself, or he can hire the segment manager, right? I mentioned it previously, correct?
Yes, sir. This is what they discussed earlier as well. Yeah.
If the total external revenue reported by the operating segments constitutes less than 75% of the entity's revenue, additional operating segments must be identified as reportable segments, even if they do not meet the quantitative threshold set out above, until at least 75% of the entity's revenue is included in the reportable segments. True or false?
True.
True. Because we have to meet the 75% threshold anyway, right?
Yes, sir.
Dash is the defined in India's 108 as a component of the entity which engages in business activity. Its operating results are reviewed by CODM and for which discrete financial information is available. Reportable segment, business segment, operating segment, and operating and reportable segment.
C.
Operating segment.
Operating segment, correct. So this is the definition of operating segment which we had studied, right? Now, as per the core principle given in the question, given in the India's operating segments, an entity shall disclose information to enable users of the financial statements to dash of the business activities in which it engages and the economic environments in which it operates. Evaluate the nature and financial impact, nature and timing of the financial impact, nature, amount of the financial impact, nature, timing, and amount of the financial impact.
Answer A.
Nature, timing, and amount of.
No, A. Nature and amount, nature and financial impact. Correct?
Sir, why not timing? Means the financial year, these are that.
No. So we will strictly go by whatever is written in the standard. So we, read the standard as a law, right? So standard says core principle is nature and financial impact. It means nature and financial impact. Although we are anyway mentioning the balance sheet date or the period for which the P&L constitutes, fine. But core principle says nature and financial impact.
Okay, sir.
Okay. So that was it from my side on this Indias. I hope you enjoyed the discussion today and it was informative for all of you.
Yes,
very
sir.
much.
Very much.
Thank you. So with that note, I wind up.
I'll be there, sir. Good morning, everyone. Thank you, sir. And students, sir, you're uploading the assignments on that portal.
Already did yesterday.
Acha, okay. And students, in case you need something else or you are filling the feedback form, I hope everybody is filling the feedback form. And in case you have, and for again, I'm just reminding you for that fortnight program which we are going to conduct on 11th November for financial reporting. We request you all to register for that and be available. This is a virtual program from 3 p.m. to 5 p.m. and it will start with final paper one financial reporting. So we would request all of you to be present. And in case you have any query, please, a Google form has been also issued along with this program registration. You please fill the form along with your query, general, technical, any query which you have on any of the topic of financial reporting. We'll try to take it and resolve it. That program is basically will give you what are the common mistakes which you should avoid during your examination, how to prepare along with your specific subject queries also. So be ready with that, okay? And register for this, and also spread this information to your peers also so that they also register and take the benefit of that program. Okay?
Oh, okay, ma'am. Where is the registration link, ma'am?
It is given on BOS announcement. We have announced this fortnight program. This is on BOS announcement. On our BOS knowledge portal.
Yes, ma'am.
We have also sent a flyer on our WhatsApp group. From there also you can scan and register. And in case you do not find that, you just put it on the WhatsApp. We'll again send it. Okay?
Okay, ma'am. It is available on the BOS portal, but I can able to go and insert all my information. But it's going. It's live on the so and so date. Only that information only is there. That the Google form is not there.
Okay, then you just go to BOS announcement and we'll do one thing. We'll also send a link of the Google form on WhatsApp group. But that where you are saying that this program is on this and this date, it also
Yes,
shows
ma'am.
for pre-registration also. We request you to do that pre-registration, okay? So that we can understand how many people are coming and what are their queries. For queries, Google form will again send it on your WhatsApp group.
Okay, ma'am. Thank you, ma'am.
Okay, okay. All the best, students. All the best, huh? And please do fill the feedback form. Okay, sir is not there, students, just sir is not there. So I would like to know from you personally, uh, do you have any problem in understanding the topic today? Today's topic?
No
Samena,
problem.
Sir,
No,
No
ma'am.
Manish, you are able to understand? Sir's
Yes.
explanation was quite okay. Matlab it is appreciable.
Yes.
Hmm?
Yes, ma'am. He perfectly explained all the concept.
Okay. So that's what we were looking at. And in
Yes, ma'am.
previous classes also, with respect to other faculty also, just let us know. See, I'm asking you very frankly because we are going to cater you. We can do one thing. Ashok ji, आप ये recording बंद कर दीजिए इसकी और live webcast बंद कर दीजिए. मैं student से ऐसे ही बात कर लूँ 2 मिनट ना. हाँ, आप वो बंद कर दीजिए please, हाँ.
Recording stopped.
और वो webcast भी